Gold prices under pressure following President's Day yesterday. We have Frank Holmes and Gold Game Film coming up. Frank, how are you?
I'm great. Back from South Africa, Cape Town in Daba.
And how was the show?
The show was exceptional. Huge turnouts, delegates, 7,000 people came from all of Africa, the UK in particular, the continent of Europe, Americans. So I think it was a very cross-pollination of ideas.
Yes, and we'll get back to Africa a little later in the segment. But to start, we're going to look at strengths for gold this week. And we're going to start with one of your notes in your SWOT analysis this morning regarding European markets and their strong appetite for gold bars and gold bullion. Now, I mean, is this something that you see growing, or is Europe going to challenge, say, those classic countries like China and India, who I guess pretty much command the demand market for bullion?
Well, I think there's two key factors here. One is retail and one is institutional. So what we're witnessing on a retail is actually government policies in Germany, which I discovered about 6 years ago, that they're really against a bullion ETF. So the bullion ETF in Germany can only be a derivative. It can't be backed by physical gold. And if you buy physical gold in Germany, you're not subject to the normal capital gains taxes. So they really promote, like in Canada, they have RSP, in the US, they have 401k. They really promote that people have a portion of their net worth in gold coins and gold bullion. And with that, you're seeing that it's been growing throughout all of Europe. And now we have, 2-to-1, that there's more consumption of this gold coins, etc., in Europe than there is in America. And I think that is significant. Interesting that this growth took place before the euro starts unraveling. And gold has hit all-time highs in euro terms. So those retail investors have actually been quite smart in protecting their net worth.
And switching to weaknesses, we're going to look at Greece. Of course, ongoing with Greece and the European Union trying to come to terms with a resolution. Now, we know gold's gaze has been firmly focused on this for the last little while. How do you see gold prices playing out until that resolution is finally finalized?
Well, I think it just creates tremendous political instability, and now it's 50% probability they'll leave the euro. What's really sad is that their socialist mindset. They're going to stop gold mining by El Dorado. They have no respect. Socialist doesn't matter. For the same thing with Zuma in South Africa. They do not respect other people's private property or other people's capital. They want your money, but they don't respect it. And I think that creates the uncertainty, which is if they do leave the euro, I think the gold tax on $200.
Now we'll take it over to our OT segment, starting with opportunities, and we're going to talk currency wars. Our currency war is currently going on, and how does this affect the yellow metal?
Well, I think we've been in currency wars, and it's been stealth. And what's important for the listeners is to see that central banks are all-time record high in consumption of gold bullion. And more banks are doing it. And I guess they know the G20 when they get together, what they're talking about. And basically, they've stretched interest rates to negative rates and zero. They have exhausted with taxes and spending. So the only way to try to promote growth is a currency devaluation mechanism. And gold will always do well during that sort of dramatic swing. And I think we're in a secular currency devaluation scenario globally.
And now we look at threats, and we'll take it back to Africa, focusing on South Africa. Now, I mean, it's no secret that the country has been going through some hard times, mining-wise, at least in the last couple of years. Certainly a fall from grace. I guess, do we still consider them a major player in the mining space?
South Africa, just like the rest of the nation, has tremendous political instability, and Prime Minister Tony Blair commented on that. And that is one of the dangers for attracting capital. I commented on that in my speeches there, that most financing occurs around a 10-year government bond. So you must have fiscal stability or tax stability for at least 10 years before a major mining company is going to make a commitment to one of those countries. And South Africa has instability from unions, it has instability from environmental, and now Zuma, on the last day of leaving, comes up with a policy that no one outside the country can buy real estate in South Africa. So it's another form of confiscating wealth with these envy policies. And envy policies are classic socialist policies, and that relates to Greece. Coming back, as socialist policies, they don't respect other people's capital. They don't respect private property. And that's the drama that's unfolding in Europe that creates the instability we talked about briefly earlier, and it's the same thing in South Africa. Now, countries like Kenya, Mozambique, Ethiopia seem to have much stronger disciplines and create stability. Zambia has instability. Zimbabwe has instability. Ghana has stability for the mining sector. Mali has stability for the mining sector. So it's important to recognize there are huge differences throughout Africa.
Fair enough. Let's move on to the touchdown pass of the week. NFL Combine coming up later this week. You can be Jameis Winston or Marcus Mariota throwing that touchdown pass. Frank, what do you got?
Well, I think the big thing is what's going to happen with gold during Chinese New Year, where that demand slows down, people are busy traveling. It's like American Thanksgiving. It is the record number of people travel around to see their families. And if any Americans that really want to understand what is taking place there, it is so much like our Thanksgiving. And so I think markets are going to be quiet, and we'll see what happens. The big touchdown pass will come place after Chinese New Year. Which I remain bullish because what we're seeing is that the Chinese are consuming, going up to this movement, looking at just movement of gold per month, they're consuming almost the total world's mine supply again. They did it 2 years ago, and they've done it again last year. When we look at 12-month rolling period at the end of January, I think that that's significant in what they're doing in the consumption of gold. And they have a dollar cost program where Chinese people can turn around and basically buy $20 a month or $100 a month, and they can consume gold. Well, they have millions of people doing this in a dollar cost program. And I think that that is an important part in their culture, like earlier we talked about what's taking place in Germany.
All right, Frank covered a lot of bases today. Thanks so much for joining us. And thank you for watching this edition of Gold Game Film. As always, any comments or questions are welcome at newsfeedback@kitco.com. Have a great week.